Hello and welcome to traders and investors. I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. Today is August 4 and we're starting from euro-dollar pair with Yakut Novak and continue with GBP USD currency pair. Weak PMI data from the Eurozone led to a decline in euro-dollar, but a similar report from the US, which revised downward, limited the downward potential. Disappointing reports on industrial output in France, Germany and Italy could resume pressure on the pair, as will news that the volume of retail trade in the Eurozone decreased in June. However, volatility will not be high during the European session because the upcoming US labor market data will determine the direction of the pair. For long positions, buy euro when the quote reached 1.0965 and take profit at the price of 1.1017. Bullish traders will return to the market in the event of very good reports on the Eurozone. However, before buying, make sure that the MACD line is above zero, or is it just starting to rise from it? Euro can also be bought after two consecutive price tests of 1.0939. But the MACD line should be in the oversold area this time, as only by that will the market reverse to 1.0965 and 1.1017. For short positions, sell euro when the quote reaches 1.0939 and take profit at the price of 1.0887. Pressure will intensify the absence of bullish activity at daily highs. However, before selling, ensure that the MACD line is below zero or is starting to drop down from it. Euro can also be sold after two consecutive price tests of 1.06 For short positions, sell euro when the quote reached 1.0939 and take profit at the price of 1.0887. Pressure will intensify the absence of bullish activity at daily highs. However, before selling, make sure that the MACD line is below zero or is starting to drop down from it. Euro can also be sold after two consecutive price tests of 1.0965. But the MACD line should be in an overbought area this time, as only by that will the market reverse to 1.0939 and 1.0887. Before we get a trading plan for GBP USD for today, let's analyze yesterday's transactions. The test of 1.2681 coinciding with the rise of the MACD line from zero prompted a buy signal of the pair. This, along with the decision of the Bank of England to raise interest rates and comments from Fed Chairman Jerome Powell, led to a price increase of over 40 pips. PMI data for the UK construction sector lies ahead, followed by a speech from Bank of England MPC member Hugh Peel, who may talk about the bank's commitment. PMI data for the UK construction sector lies ahead, followed by a speech from Bank of England MPC member Hugh Peel, who may talk about the bank's commitment to a tight policy. Most likely, the two will result in the further strengthening of pound. For long positions, buy euro when the quote reached 1.2740 and take profit at the price of 1.2790. Growth will occur after aggressive statements from the Bank of England regarding future policy. However, when buying, make sure that the MACD line is above zero or is starting to rise from it. Pound can also be bought after 2 consecutive price tests of 1.2705. But the MACD line should be in the oversold area this time, as only by that will the market reverse to 1.2740 and 1.2790. For short positions, sell pound when the quote reached 1.2705 and take profit at the price of 1.2656. Pressure will increase in the absence of activity at daily highs before the release of the US labor market report. However, when selling, ensure that the MACD line is below zero or is starting to drop down from it. Pound can also be sold after 2 consecutive price tests of 1.2740, but the MACD line should be in the overbought area this time, as only by that will the market reverse to 1.2705 and 1.2656. Gold, sweet gold. We've got a trading plan for this commodity asset presented by Dimitrios Tsoupas. Early in the European session, gold is trading around 1935. Around the 61% Fibonacci retracement and below 6-8 mirror level 1937. We can see a consolidation, which is a sign of the strong movement ahead of the US non-farm payrolls for July. Gold has strong support spanning from 1928 to 1924. This zone could offer an opportunity for a bounce. Thus, the price could reach the 38 Fibonacci level, which coincides with the 21 SMA, around 1952. In the next few hours during the American session, the non-farm payroll data will be published. This data is expected to be favorable for the United States. If the data comes out above 205K, we could expect a decline in gold towards the 1920 area, where the weekly support is found. If the non-farm payrolls data is negative for the United States, we could expect a rebound above 1937, 6-8 mirror level. In this case, the metal could reach 1943 and 1952. In the medium term, for a recovery, gold should consolidate above 1953. Then it could open the doors for a bullish rally to 23% Fibonacci and up to 7-8 mirror level. On the other hand, 61% Fibonacci level 1928 offered immediate support for gold. The break of these could accelerate its fall towards 1920 and up to 5-8 mirror level 1906, where the 200 EMA converges and is the last bottom of the metal and the defense of the bulls. According to the daily chart, our trading plan for the next few days is to buy gold above 61 and 8% Fibonacci 1928, with the target at 1952, 21 SMA. Moreover, in case the price rebounds at around 1920, it will be seen as a signal to buy. And finally, here's Laurie Bailey with AUD USD pair focused. Let's have a look. The Australian dollar returned above the key level of 0.6560 this morning. Yesterday, it settled below this mark. Now it intends to attack the MACD line around 0.6636 mark, as the Marlin oscillator sharply turned upwards. Staying above 0.6636 opens up a higher target level at 0.6783, 0.6798. As it moves higher, intermediate resistance is found at around 0.6710, the nearest local extremes. If it falls below yesterday's low, it may try to fall to the support level at 0.6388. On the 4-hour chart, the Marlin oscillator is rising ahead of the price and is already attacking the bullish territory. The market sentiment is positive. The target range of the nearest resistance level at 0.6625, 0.6636 looks significant, but there is considerable growth potential. The release of US employment data can boost this potential. That's all for today. See you online soon. Good luck.